Welcome to Alpha Wolf's Den. It's here that we seek enlightenment. Alpha Wolf Trading recognizes that the most successful companies in the world at one point had no earnings. There's a lot more to a company than just its earnings report. That's why here at Alpha Wolf's Den, we interview executive teams. We want to get to know management. We want to understand the vision, the mission, the strategic drivers, the plan. We want to separate fact from fluff. This is not a paid for promotion interview. This is solely wanting to know the company's vision, mission, their critical success factors, their strengths, their weaknesses, their opportunities, and the threats. We want to know the long-term objective and the tactical initiatives that leadership plans to implement to achieve success. We want to know about the company's debt, the cap structure, what it's going to take for them to become self-sustaining and stop burning through cash. We want to know management's previous failures, challenges, hurdles, how they overcame them, or what they learned that they can apply in their current role. We're trying to identify the risk and the reward. And oftentimes, it's strong leadership that makes the difference between success and failure. Here at Alpha Wolf Trading, we are looking for the hidden gems. And I hope you enjoy this interview because this is one of those companies that I think could be a hidden gem. Please understand that this is for educational and entertainment purposes only. This is not financial advice, and I am not a financial advisor. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up interview with Tower One Wireless, ticker symbol TOWTF, Alejandro Ochoa. This is one of my favorite guys right here. High energy guy, numbers guy, but he's actually kind of fun for a numbers guy. Alejandro, I want to thank you, man, for coming in and giving us an update on what's happening with Tower One.
Thanks, Tim. Thanks for having me, and awesome to give you guys an update.
All right, so let's give everybody a quick reminder of what Tower One does.
Sure. So what we do is basically we invest in telecom assets, right? Digital real estate. Some guys call it cell phone towers. But what makes this business very unique is the fact that it's basically long-term leases of any of our types of assets to the major MNOs you have in each country, right? So the U.S., even though we aren't present, has 4 customers, right? Verizon, AT&T, T-Mobile, and the rest of the guys. In Latin America, you guys have guys such as Telefonica, also listed in the U.S., América Móvil, WOM, AT&T Mexico, and guys like that we build cell towers for. So we jump-started our business in 2015. Since then, we've opened 5 countries. We have relationships with all these carriers, and we focus on one asset class, which is very important, which are cell towers, right? Okay. And what we do with these cell towers is we basically build them and lease them to the carriers, right? And when we lease them to the carriers, basically what we do is we sign 10 to 20-year leases with these guys. They all have CPI indexed contracts, which is very relevant at this point with the inflation that's going on globally. Very different to, many other REITs or real estate assets out there that have a fixed escalator. We have the CPI. So, as 5G rolls out, as data consumption keeps on growing, these networks require additional towers, additional data centers, additional fiber to be able to operate properly, right? So we went from 2G to 3, 3 to 4, and now 4 to 5G. And what that means basically on our towers is, in the majority of them, we swap out equipment. And in many cases, what we continue to do is infill that amount of towers with additional towers to support the existing ones, right?
Okay, so to be real clear, you don't build a tower until you have one tenant that's signed to a long-term contract.
Absolutely. We don't build any tower without an anchor tenant, right? And how it works is very simple. We build every tower to host up to 3 tenants, right? So I can make the math work with just one tenant, but what makes this industry excessively interesting is the ability to add that second and that third tenant without additional CapEx. So let me walk you through what the unit economics look like. We build a cell tower at a minimum of a 12% cash on cash unlevered, right? And if we add the second, that basically doubles. And if you add the third tenant, that'll tend to triple. So people will say, well, how often did you get 3 tenants on a tower? Well, the reality is that it takes time, right? It's a portfolio. It continues to add on different customers, not only as customers, but also when they decide to add additional equipment to support the traffic in the markets that they're operating in, right? So across the US, you'll see averages of about 2.25 tenants per tower. We have 1.2 tenants per tower right now, which still gives us a big running way to actually squeeze more value out of the existing portfolio that we have in these markets.
Okay. So you've got a backlog of 450 towers currently, right?
Sure.
Actually 450 plus. You've got how many towers that are completed right now?
So right now we have over 238 towers that are built, cash flowing, and in operation. And we continue to add, different amount, about 10, 15 towers per month to that, to our existing portfolio, right? So what's also important to highlight about that backlog is it is fully funded, right? So, this isn't a guessing game of what our value should be. This is basically a straight line as to how we should continue to execute. So our team's been in market for I'd like to say forever, but for at least more than 20 years in each of the roles they play. We have our CEO that comes from another tower company. He had built over 2,000 sites in the local markets. All our legal teams, our site act teams, all come from either carriers or other tower cos. So across the 70 professionals we have in-house today, everybody comes from that industry, and we're supported by over 450 additional subcontracted individuals to help that rollout out. So it's a nice amount of employment created across the industry here.
Okay. So let's talk about, so when you're talking about this, you're talking about this as being basically almost a real estate REIT play. Right.
Even though we're not a REIT at this moment, but everyone starts as as a regular corporation. Then when you go through your net operating losses, you'll tend to want to convert over to a REIT structure. So
and these assets, I mean, look, you got 230. Those are assets that you could actually sell if you wanted to.
Anytime.
Right? Yeah. Anytime. All right.
Anytime. And by the way, we've done so in the past, right? So this isn't, a guessing game as to can we. We've done it. We've done it successfully in multiple times, and we've done it with organizations that are, pretty substantial in nature. So in this industry, the highlight, I think, for anyone is everyone always says, well, you need size to be able to sell to a larger party. And the fact is that's not right. And that's not true. And the reason why is rolling up towers is the simplest form of M&A in the world. And the reason why is all they do is add that site to their rent roll, right? They don't acquire companies. They don't acquire, goodwill or employees. They just shift that IOU to the new company, and that's it. So when we've sold these towers in the past, it's a 30-day process, right? It's not nothing, and it's a very liquid market for it, right? So the guys that you see that are buying the towers in these local markets we operate in are well-known names such as, American Towers, right? American Towers today, and I always reference that because it's frankly the number one United States REIT in market cap and in size, and their sole asset class is telecom infrastructure. That's it, right? There is no buildings or anything else. All they have is towers, fibers, and data center. That's all. So being the number one U.S. REIT, all they're doing across the planet is actually rolling up towers. So what that means is this: the market today, at least in Latin America, where we principally operate, is 50% owned by tower companies and 50% still owned by the carriers themselves, right? And with time, what you're seeing is basically a divestiture of these assets from the carriers for a multitude of reasons. The first reason is, they've already depreciated that asset for as long as they could, right? So no bump up on that. And number two, it frees up a ton of capital for them to reinvest into other areas of their business that have higher growth, i.e., content, i.e., IoT, and other avenues that they're looking to pursue. And number three, frankly, the complexity of building new sites. In the past, there was very light regulation across the world as to how to permit what has to occur. Now that's very relevant in all markets. You need a team that specializes in doing that. So I'll give you what the number one and the largest differentiator between what we do and what American Towers does, or what SBA does, or what Crown does, is their sole focus or their principal focus is M&A, right? And what I mean by that is buying up towers from either tower companies or from the MNOs. We have a slightly different business, which is we build a tower at a time, right? But it's still the same contracts, still the same markets, still the same customers, still the same terms, and still the same exit multiples that we all get in the industry, right? So while I'm building a tower for, call it $100,000 a unit, they're buying it for $400,000 or $500,000 a unit, right? Just as a way to give you some color on that.
Okay, so I think the last time that we talked, you guys were, I want to say it was like somewhere around 178 towers that you had completed.
Yeah.
Right. So I mean, you're definitely making progress on the completed tower front.
Right.
And then recently, Ecuador. You got something going on with Ecuador, right?
Absolutely. So one of the things that makes it very, very interesting on why we went into Ecuador, I think there are two principal reasons. Number one is our customer, right? Our customer said, "Hey, what do you guys have? An interest in opening a new market and supporting us in that rollout?" We raised our hand and said yes. But second of all, one of the things that helps our story out a lot is the currency mix, right? So by adding countries that are dollar denominated, like Ecuador, right, you'll see on the financials as we consolidate more of a less volatile movement with respect to these currencies, right? And these currencies across the world are quite volatile. I mean, the euro was 120, now it's 105. The Colombian peso was at one time, 3,500, at 4,000. So it's all over the place. So the more dollar denominated / euro contracts we can chase, the bigger that it'll look across all fronts.
This is I don't remember these things being in your deck. You guys update your deck with the disguised stuff? I don't remember seeing.
Yeah. So one of the things that we're trying to do is, what is it that we do, right? Cell towers are nothing new, right? I think that what has transpired over the years is who are the owners of the towers. That has been what has changed, right? And frankly, on the Tower One front, the reason we set ourselves up to be public at an earlier stage is I said, there's got to be another way to finance this industry, right? And I said, listen, let's go out there and let's do it as a small cap. Let's go out there and do it as a nano cap. Let's continue to build the same assets the larger corporations do it, but 90% of our industry is private equity backed, and there's only a handful of publicly traded companies in the planet, right? So if there's 300 tower companies in the planet, 5 are public, the rest are private equity, right? So I said, well, there's not even a small cap in the world, right? And we took that courageous step forward and decided to do that. Obviously, it's it's tough. It has a set of other dynamics that you have to attend to, but that's a decision we made, the decision we support, and how we continue to push forward.
Right. And, a big portion of, or a big challenge, I would say, is that as a microcap, it's difficult to get your story told, right? It's difficult to get any kind of coverage. So, I mean, it's a big challenge, right? Especially on the OTC. It's a tough challenge. They don't call it OTC hell for nothing, right?
Oh. But Tim, you know what is exciting and what allows us to focus on the business is that, irrelevant of the platform, irrelevant of the stock price, we've been able to do 95% of our financings via debt or debt equivalent on our balance sheets. And the reason why is that we are very asset heavy, right? And the banks love the assets, the bank love the off taker, right? So the guy paying the rent is not Tower One, it's Telefonica, it's AT&T Mexico, it's America Móvil, it's all these multi-billion-dollar carriers that have not only a contractual obligation, but a essential obligation. They must pay the rent on the towers for the network to work. It's very simple. So because of that, it becomes interesting when you chat about how we've funded the business to date. And we've been able to raise over $40-50 million. When you look at our market cap, people say, well, how do you do that? And again, it's because of the assets, it's because of the customers, and it's because of the contracts.
I think there's another component here that's extremely, I think, really important to highlight, is that you're originally from Colombia, right?
Yeah.
And you have relationships in all of these places that are far-reaching, right? I mean, you've been involved in these areas for a long time. You've got some very strong relationships, correct?
And that goes back to my days in investment banking. I used to cover Latin America, right? So with that, you build a network that's a little different to the U.S. network, and you build on that, and it's a relationship-driven business. It's a very finite niche business, right? So that's something else that makes it very, very attractive, right? You go down to Colombia, there's 5, 6, 7 tower codes, right? You go to Ecuador, there's 3, 4 tower codes. You go to Mexico, there's 10, 11 tower codes, right? So this isn't a hey, I have money, I want in. All the private equities would do that if it was that simple, and they don't, and they can't, right? Because this isn't just about the capital, it's also about the relationship, the trust with those carriers. So that's why I always make reference to the team, and having recruited these different professionals that worked at these carriers creates that bridge of trust between what we do and what they need, that allows us to get additional orders and continue to grow the business.
Right. Okay. So what was the deal with Ecuador, by the way? I mean,
so the deal with Ecuador, we got invited by Telefonica to go into the market and do 2 things for them. One is build towers, right, which is what we do day to day. And the second was help them finance some equipment on those towers. So even though the equipment is not our traditional day-to-day business, it was a very simple business, because all we had to do was deploy capital, which we took down from a bank, keep the spread, right? We're not responsible for the maintenance. We're not responsible for the installation. We're not responsible for anything in or about the equipment itself, right? So we stick to our passive infrastructure strategy, which is the cell phone towers, right?
Do you own, when you put your tower up, do you own the land or you lease? I mean, how is that?
It's a combination, right? Because you have 3 type of opportunities. One is buying the land, right? And
Right.
that usually works well in either suburban or rural areas, right? When you're doing an urban deployment, you have a mix of situations, right? The carrier wants a GPS coordinate, a radius around that GPS coordinate, and the odds of hitting a site that's for sale with that exact coordinate is quite it's quite hard, right? So what happens is you'll lease it from either a private or a government body. So sidewalks, for example, you can build it on sidewalks. You can build it on street dividers. You can build it on rooftops. You can build it on parks and different assets that are out there. And what that means is basically, customer A leases me for $1. That's a full pass through to my customers, right? So I don't make or make or lose money on that trade, but it allows me to set up the tower there, right? And that's part of the first steps we always take with all our towers, and I'll walk you through it. So every tower that we build has basically, I'll call it 0 to 120 days on average, 6 months max. And this is what we do every single day repetitively, right? Tower 1 to tower 1,000, it'll be the same thing we continue to do, which is you go out, you get a assignment from a customer, which is nothing more than a GPS coordinate and a radius around that GPS coordinate, right? And the height requirement. What you do there is you shoot off what we call site acquisition, right? Which is going out there, finding what's there, who owns the properties in and around that radius, because we can move inside of that radius, and you'll find 4 or 5 candidates, right? Of those 4 or 5 candidates, obviously some guys want more, some guys want less. You look at the more opportunistic one, you sign that lease up, and that triggers step number 2, right? Which is the permitting of that site, right? Different to the US and Europe, permitting times for us are 0 to 4 months, right? Europe, 2 years, United States, a year, right? So it's, it takes a while. And then right after that, what we do is we build. So actually where 95% of the CapEx is deployed is in a 30-day window where we build that tower. And there's nothing more than a concrete slab and a metal pole, right? And I'm oversimplifying it, but that's what we do, right? And then the carrier is responsible for, adding their equipment, running the fiber to the tower. That's been traditionally what they do, and they have other vendors for that, right? So we give them an apartment building, they furnish it.
Got it. Okay. What are you excited about over the next 6 to 12 months?
Well, listen, I think there's a lot of things that we're very, very excited about. I think adding on new contracts to continue to give this currency stability is critical. We've made a great headway into Germany and Canada, where we're doing site acquisitions for a couple customers right now. That I think is going to grow throughout time. Those markets are just as exciting as anyone else. Actually, the fact is that in these more developed countries, they're commanding higher multiples, right? So what happens is in Latin America, where on average you're high teens, low 20s exit, Europe, you're looking at low 30s, high 30 exit, right? And obviously, the reason you get that discount for Latin America, currency, geopolitical, et cetera, et cetera. You don't get a discount just for no reason. So, so diversifying into some of those countries, I think, is very important. All the tower guys are used to doing that, right? Because the reality is that in every country you have 4 or 5 customers. That's it, right?
Right.
There's not 100, 200, 1,000, 10,000. And you see, when these consolidations are happening in other markets, you see management teams that are available for hire. So uniquely in Germany, for example, we were able to partner up with a very interesting character, which was the first CEO of Deutsche Telekom in the US, right? Retired in New York, spends half his time in Europe and half his time in New York. And that's how we approach that market, right? I'm not German, don't speak German. So you need partners, right? And we build with teams, and we build with these partners to move these countries forward, right? So country and adding of those countries is number one. And then number two, we've been dancing with a couple of JV partners across different asset classes that have the same model, right? And the same model is build with a guaranteed tenant for long-term leases from investment grade off-takers and that can give you that recurring revenue. So to add to our product mix, there's a conversation around fiber that we're having, a conversation around smaller scale data centers. And I think that once we, continue to bolt that on and mature as a company, we will not only have towers, but we'll also dive into the other asset classes that have, similar attributes with respect to multiples and recurring revenue, right?
Right. There's a lot. So there's a lot of possibilities besides.
Oh, a ton.
Just executing on the vision of and keep winning bids on towers and keep putting towers up.
Yep.
And then of course, hopefully the towers that are up are signing on a new tenant. I mean, how does that work? I mean, all of a sudden, let's say you've got a tower that's been up there for 2 years, right? It's had one tenant on it. And all of a sudden I mean, does the carrier call you and say, "Hey, I see you got a tower out there. You know, I want to."
No. So what we do, it's kind of a proactive and a reactive approach, right? The reactive approach is we're consistently feeding them the new sites that we build, right? And that goes into their database. And when they need it, they'll call us. But we're also consistently going on there, having face to face and saying, "Hey, look, this is what we did. This is how we did it." So what makes us very different to the approach many of the bigger tower holders have, right? Like if you go to Colombia, for example, American Tower might have 5, 6, 7,000 towers, right? I mean, that's a boatload. So their core is focusing on marketing of those towers, adding more tenants, adding more amendments to that, to those towers. We're basically going back to the customer and saying, "Hey, what do you need built? Where are you having problems? Where's your issue on the permitting side? Let's help you out." And that's why today, you know, I would say in the markets that we're in, at least Colombia and Ecuador for now, on the built to suit basis, which is a tower at a time, and helping them roll this out, I would consider ourselves a leader in that space. And I'd say for one carrier, we do about 75% of what they do. For a second carrier, we're doing about 40% of what they do. And for a third, it's about 35, 40% of what they do, right? So, I think we set ourselves up to be that local partner, that problem solver for them, right? Because remember, carriers are not, the guys pulling permits, the guys coordinating crews, the guys sourcing steel, the guys doing all that legwork. They need someone they can trust that, hey, if we're going to deliver this site in June, it's in June, right? And that's where we come in.
So COVID probably set you guys back, right?
Actually, funny you mentioned that. And actually, if you were to look at the way many of these tower REITs actually performed through COVID, all REITs went down except the tower. Right. And why I think that happened is, first of all, everybody figured out we don't have humans at our sites, right? We're steel, right? There's no, people going and, so the lockup didn't affect us at all. If anything, what COVID did was shed a very big spotlight on the connectivity conversation, right? The impact it has on everyone's lives, the importance of being able to have it available. Right. And not only on urban, but rural areas, right? Today, we're in areas where there's been zero cell phone coverage. And you're seeing these kids being able to access tablets now, being able to get solutions via telemedicine. So it's a big impact you have in, and what this COVID did was, if anything, shed a spotlight. Now, on the downside, what it also did for other segments of the business, steel, right? Doubled, tripled in price. Right. The good thing is that steel itself, as the all-in cost of a tower, is sub 25%, 25%, right? So does it hurt? Yeah, of course it hurts, right? Does it change the economics that much? Not much. The second thing that it did was the supply chain for principally the sourcing of all the kits required for these data centers, right? So there's backlogs on delays, not so much in the sourcing. We don't have the same issues as the chips and that. But what you do see is you have to prepare yourself to, before you used to have 30-day delivery times. Now you're looking at 90, 120, 180. So you got to prepare yourself to take that on, because it's not like it was before COVID, which was, one phone call, 30-day delivery, you're done. Now it's a little bit trickier in the sense that you have to say, all right, how many are you doing next quarter? All right, we're doing so much. All right, so push that out and let's get it going. So the impact, I would say, was actually a positive thing. Obviously COVID has nothing positive about it, but it did shed a light in the industry and basically obligated many of these government individuals to address it. Because, look at your area, look at any city, right? 9 to 5, everyone was in that city, right? But what happens when everyone's in suburban back at their homes? Now, where do you build the towers, right? So where do you throw the fiber? Where are you seeing the traffic? And that kind of was adjustment many of these carriers, MNOs, had to do, right? The T-Mobiles or the AT&Ts all of a sudden say, well, hold on, the traffic shifted, right? Because Tim is no longer in his office 9 to 5. Tim's over in XYZ neighborhood doing the same amount of work that he was doing in the past. And oh, by the way, Now, instead of commuting in person, now he's using data and video, two-way videos. Oh, wow. And who's going to fund that? And how is he going to get that done? So, these conversations multiplied across the planet were a big driver of new business. So,
yeah. So, I mean, one of the things that I think we can say, and you and I were talking about it prior to starting the recording, is that there is going to be no shortage of having to deal with a lot of data being transferred, right? It's just getting bigger. I mean, metaverse, 5G, I mean, all of this stuff, work from home, is just requiring more towers.
And here's what's exciting, right? And we will never get bored in this industry, right? Even though towers sound like, hey, they've been here and they've been here forever. It's a globalized business. It's always changing. So here's a fun fact. And then this is something that I'll take away from one of the guys at the RBC conference yesterday where we participated in. The median age in Africa is actually 19 to 30 versus the US, which is north of 50. You know what that does for the data consumption? Who's on these? Who's doing the gaming? Who's doing the TikToks? Who's doing the Instagrams? Who's doing it's not that's 50, 60, 70, 80-year-old, right? It's the younger guy. But hold on, where are they? Oh, well, they're over there in Africa right now. Oh, okay. So what you see is these bigger REITs all of a sudden have footprints in South Africa, have footprints in Kenya, have footprints in Nigeria, Egypt. And when you look at the customers that they have, enormous, right? Vodafone, MTN, all gigantic names, right?
Yeah. So, I mean, there's definitely nothing but growth, right? I mean, a lot of growth.
That's right.
And I mean, you're positioned, you've got the relationships, you're expanding into other countries. You've got some potential JV opportunities that you're exploring. What do you think that the biggest issue, and I think we pretty much have covered what you do, right? I mean, would you agree with that? Is there anything?
100%.
Yeah. All right. So what do you think the street is missing about the stock?
No, I think that the disconnect that we have, and I have my own theory about it, is this, right? Number one, institutions that know this industry, right?
Mm-hmm.
Do not play in the small cap space, right? So there are billions and billions of dollars getting tossed around on a daily basis in the industry, i.e. Switch. And we had that conversation before,
Right?
$11 billion transaction between Digital Bridge and Switch, right? Data centers, towers, data center towers, right? That's a public name, right? Then you have private names like Phoenix Towers, which at one point was our development partner, backed by Blackstone. When I met him, he was at 2,000, 3,000, 4,000 towers, now at 17,000, 25,000 towers, and keeps on growing, right? So I think the issue is, when you have these smaller stocks, liquidity is an issue, right? I think that's our number one issue right now. Number two is the being a Canadian principal listing and over the counter, even though 80% of our volume now is in the US, you don't have these 5-minute clips to be able to reach out to any investor. If I had a way to spend 5 minutes with everybody that looked at my website and I gave them the story, I think they'd think a whole lot different, right? But you sit across, and I think the sticker shock is what might keep many of these guys that don't do the homework away from what we're doing, right? Because they sit there and they say, well, hold on, how does he do a $40-50 million financing on a $7 million market cap? Well, he's going to dilute us. Well, shit, I haven't done that in 7 years. Why would I do it now? Right. Number two, I think that, when you look at the accounting of the business, it becomes even trickier, right? And here's why. I'll simplify it. I cannot, via IFRS, revalue the assets of my towers, right? So what happens is that they sit there at cash cost, right? So while the NAV continues to go up, right? And I'll make it this simple. If we execute, and when we execute on the remainder of our backlog, that's fully funded our enterprise value will be plus $105 million, right? We're at $7 million market cap, right? So, you know, I think that's the biggest concern, right? I think, look, just like I met you, Tim, right? Once I explain it, it's very simple. They're cell towers, right? This isn't, you know, we're not sending guys to the moon as Musk is. These towers have been around forever. So it's a real estate play. That's
And they're not going away. I mean, they're not going away.
And they're definitely not going away, right? But that's the major issue, right? A stock bouncing around, you know, and when you see these bouncing around on these nano caps between, you know, 5 cents to 12 cents, and you're seeing, you know, 30, 40, 50, 60, 70% movements in any direction, up or down, people scratch their heads, and they, you know, so I wish I had, you know, and one of the things that we're trying to do is, you know, on our website, we went out there and we put a Towers 101 video to kind of dumb it down for anyone that wants to take 10 minutes to learn about what we do. We send out the monthly construction report so people can see the progress of what we're doing. You know, we have our internal IR gal, which, you know, takes phone calls and kind of walks people through how this business works. But people have to do at least 5-10 minutes worth of work to get it. Right. If not, the sticker shock, I think, is, you know, the first thing that people say, you know, whoa, you know, how does this thing work? Right.
Well, I can tell you this. I mean, look, the small microcap space has been getting pounded for the last 14 months. Right. It isn't anything for a lot of the companies. It's not company specific. It's sector specific. Right. So as I look at your stock, actually, I mean, if you look at how you've held up for, you know, 2022, and I mean, you know, you had this decline here, but for 2022, you've just been kind of going sideways, right? I mean, if you pull up most stocks in the microcap space for the last, you know, 12 months, they've been almost going straight down, right? So I know that probably doesn't make you feel good. And
it's a bit frustrating, right? Because I know exactly where that selling came from. We acquired the remaining stake of a asset that we had for stock, and they, you know, with that just seeping out and the little volume combined with it, it's supply demand out there, right? So,
right. But you know what? All you can do, man, is continue to keep executing, right? Sure. Which you're doing, and you do have some potential catalysts. And you know, I don't know who you're talking to in terms of JVs, but you know, if that turns out to be somebody substantial, that changes the dynamics or changes the picture immediately, right?
I agree.
So, I mean, I look at it like this. You just said when we get that fully built out, what was the enterprise value once you get that fully
105, 110, yeah.
And it's trading, and you got a market cap of what?
7, 8.
Yeah. I mean, it's pretty, that gets to be stupid math, right? Yeah. Stupid math. So eventually I think people start to get it. So all you can do is continue to execute, continue to put up towers. There's not going to be a shortage of demand for towers, because there's going to be a ton of data that's going to be needed to be transferred and collected. Right. I mean, that's not going away. It's getting bigger. So I think this is a fantastic story, Alejandro.
And actually, Tim, one of the things that we're very, very good at as an industry, excessively good on, is we've been consistent with underestimating the data consumption. Right. Like no one's nailed it. Right. It's just more and more. And just when you think you've figured it out, even more comes out. Right, the use of these applications, the use of these platforms, the amount of data, the regulation of every country wanting the data in their country, in their local countries, creates for more requirements and more need for infrastructure. Right. Okay. And again, 5G's just another example of what that's going to look like. Right.
Rising interest rate environment. Why are you different from everybody else?
Very simple. Our contracts are all CPI linked. Right. So we get the step up. And makes up for, you know, any inflation that's transpired in those local markets, right? So that's very important. And you know, look, it hasn't been a conversation point over the last 4 or 5 years. Now it's a conversation point, right? Because you don't make up, lost in inflation step ups, right? If there's inflation, that it is what it is. The damage is done, and if you can basically mitigate that by having the step ups from all your customers, that's very, very, very critical, right? Where you don't see that as much is the U.S., right? Where everyone has these real estate contracts that are, I say, majority fixed escalators, right? So, if your escalator is a 1% increase, a 1.5% increase, and all of a sudden inflation is 6, 7, 8, wherever that number lands, you got a problem.
Right.
So we don't have that problem. So we're grateful for that.
Awesome. All right, listen, man, I'm going to wrap this up unless there's something that you feel like I missed or you really want to highlight, but we're just going to keep following the story, man.
Oh, thanks. And I think, for all your viewers and everybody that you're around, I think it's important just to, jump on our website, log into the newsletter that we send out on a monthly basis.
Yeah, actually right above my head here, you got, sign up for it's actually a newsletter. It's not an email alert service for investors, but you do send out the construction reports, right? How many towers are completed. Then any news events that come out that are, impactful. So sign up. Look, the way I view this is this. The stock has been in consolidation mode. It's been in a downward trend for multiple years, but at some point when, you get to X amount of towers and you look at the valuations of this company, the market cap and the enterprise value, they just don't match up. And at some point, I think the market is going to realize that. And, maybe you break that downward trend. Right now, it's a tough market for everybody, right? It's not just you. So got to keep getting the story out there. And that's what we're doing, right? I mean, look, you're executing, you're doing what you say you're going to do, right? And that's one of the most important things to me. So eventually the market's going to get it. When that happens, I can't tell anybody. You just got to be patient, right?
Hey, listen, we just got done filing our last year's and announced that first year positive EBITDA. So we're changing the corner on at least that metric, which, many guys look into, right? And I think to close out, one of the things people should look at is the value that we're creating for every tower that we build, right? And the fact that on the balance sheet, it'll only show up as cash, right? And the issue with that is that's what drives this, right? So just to give you an example, we're putting out the press releases now with how many towers we built, but every time we're putting out the press releases with how many towers we built, rather than saying 6, 7, or 8 towers, I'm now saying $2, $3, $4 million worth of non-cancelable rent. That should ring a bell, right? In addition to that, when we build towers for 100, and traditionally we've been selling them for 3 or 4 or 500,000, you should say, hey, hold on. So 20 towers with a spread of maybe 100 or 200. Wow, he just created another $3 million worth of value, and the stock hasn't even inched up, right? So, follow us on any of our social media, on our website, and happy to chat when anybody has a question.
Perfect. All right, Alejandro, thanks for coming in, man. We'll definitely have you back soon, right? We'll have you back in a couple of months. We'll do it again. All right.
Take care.
All right, hold on a second. Hey there, all you stock market junkies. Thanks for tuning in to yet another CEO follow-up interview with Tower One Wireless. Alejandro Ochoa, CEO. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. Why not give us a share? And while you're at it, how about giving us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.